purchase facility?
For sure. So with respect to bankers' acceptances, again, this was set up early on when markets were not functioning very well, and we agreed to purchase a certain amount a week of bankers' acceptances. Right now, we have only $3.7 billion on our balance sheet. Much of our purchases have matured. It peaked at around $47 billion. The reason we don't have many more left is because they've matured and markets aren't interested in providing us with any. So when we go out every week to say, okay, we'll buy a certain amount, they're not being offered because the market is working extremely well. And that's why, as Governor Macklem said earlier, we've been able to scale back some of these programs, including the Bankers Acceptance Program, as market conditions have improved.
And what about the commercial paper purchase program?
The commercial paper purchase program, it's $1.7 billion right now. It peaked at 3.6. Again, same story.
Right.
Very important at the beginning, but if you look at spreads, market activity, it's improved quite a lot.
Okay. Well, thank you for that update. Now, Tiff, I want to talk or ask the governor to comment a little more broadly on the issue of household debt, which the governor has commented on already during this hearing, but the bank did issue a report in May that raised serious concerns about household debt being likely to rise. It was noted in that report that the number of vulnerable households, those with putting more than 40% of their income towards paying off debt, is likely to rise due to the economic circumstances arising from the pandemic. It's been about a month since that report. Would you care to comment on that serious issue, especially at a time when we see that the household debt ratio has reached 176.9% according to Statistics Canada, which is close to an all-time high?
I can say give you a bit of an update. Debt is a stock, and so it doesn't usually change really rapidly. But I think we see two things in the last month that are affecting this. So on the one hand, as I indicated, thanks in large part to the government's fiscal programs, and particularly the transfers to households, they have replaced the income lost from COVID-19, and people are buying less. So we've actually seen some increase in the savings rate, and some households are using that to pay down their debt. And we're seeing the rate of growth of household credit has come off. On the other hand, the denominator in that ratio, household debt over disposable income, of course, the denominator is falling because people are losing their jobs and their incomes, their disposable income may be going down. So again, the government is replacing much of that. So hopefully disposable income will be going down much less than GDP, put it that way. So there are these two things going on, and we'll have to see how they evolve going forward.
Great, thank you.
Mr. Cooper, we'll give you time for a quick one if you have one.
That's okay.
Okay, thank you. Then turning to Ms. Zerowitz and on to Ms. May.
Okay, thank you so much. I just also want to lend my congratulations, Governor Macklem. Thank you for taking on this important role, and thank you for your important service to our country at this time. I have two questions for you. Mr. Cooper had started talking to you about, or asking some specific questions around the new program to support provincial funding markets, and Ms. Wilkins gave a wonderful reply to it. My question to you is there any worry from you that it's the first time we've ever, the bank has ever offered this program? Is there any worry from you that a big take-up from the provinces would actually have any type of an impact on Canada's overall GDP to debt ratio?
Well, let me just say a few words about the design of this program, because I think it speaks to how you manage risks. So, first of all, this program. Oh, sorry, the lights just went out here.
I hope it wasn't my question.
Anyways, I can still see you. There we are. Okay. Oh, blinding. Sorry. I need to wave my hands more. I think that's the problem. Not enough movement here. There's nobody in the building. We need more people in the building. Sorry. So, an important feature of the design of the program is that our purchase program is designed to be relatively neutral across the provinces, and the purchases are aligned to reflect both the size of the province and the historical pace of issuance of the province. And so that creates a reference portfolio. What we purchase won't be exactly on the reference portfolio because it depends what's available, but it should be pretty close. And so, the idea is it's not targeting any one province. It's not trying to help one province more than the other. It's really designed to ensure liquid funding markets and ensure that provinces have access to markets and can borrow. The other element of that program is that, like the corporate bond program that Senior Deputy Wilkins just talked about, by reducing the spreads relative to the Government of Canada curve, that improves the transmission and effectiveness of monetary policy.
Okay, perfect. I have one more question. So Canada, as we know, is a huge country, small population, relatively small economy. And so we very much rely on external markets as well to be successful from an economic perspective. What are you keeping an eye on internationally, globally, with other G7 countries that you're kind of worried or monitoring that might have an impact on Canada, either in a positive or a negative way?
Well, thank you for that question, and it is worth highlighting that trade is a big part of our economy. As you highlighted, we're a relatively small economy, and in order for us to compete effectively globally, it makes sense for us to achieve critical mass in some areas and import goods in other areas. There's no question global supply chains have been severely disrupted by this crisis, and companies are rethinking their supply chains. They're looking to shorten their supply chains. They're looking to improve the resilience in their supply chains. So that's going to affect trade. More broadly, for a number of years now, we have seen increasing trade tensions. Canada has been managing that reasonably well. We do have the benefit of a number. Canada actually is almost unique in the sense it's got a trade agreement with Europe. It's got one with the United States. It's part of the new TPP. Nonetheless, there is a risk in this crisis that countries look increasingly inward and protectionism increases, and that is certainly a concern. It's going to be important for Canada to have a voice at the international table, but the reality is we're probably going to have to be a little more reliant on internal growth, at least for a time, than we have been in the past, and that's going to be one of those structural features we're going to need to make sure we understand at the Bank of Canada.
Okay, thank you. Thank you, Julie. Miss May, are you back on?
Yes, I'm here.
We'll give you a question and a supplementary. Elizabeth, go ahead.
Oh, Wayne, you're so generous today. First of all, to Governor Macklem, I add my congratulations and welcome to a critical role at this critical time. This is a little different than the direction some of my colleagues have taken, but I wanted to ask you about modern monetary theory and how you see this affecting us as we're coming out of pandemic. Modern monetary theory seems to imply that sovereign issuers like Canada need not have too much fear about large deficit as long as the debt is held within the country. I'm wondering on how you think this might affect the position of large international borrowers like many of the developing countries, and whether we might anticipate some sort of debt forgiveness, such as the Jubilee year suggestions of some years back, as COVID crisis will really impact the poorer nations far more in their ability or inability to repay foreign lenders.
Governor?
Okay, well, there's a few things in there. Let me try to take them in turn. With respect to modern monetary theory, I'm sorry if I'm going to disappoint you, but I'm not a big fan.
Not a big fan, okay.
Our actions, our extraordinary actions are very much anchored in our inflation target. They are anchored in providing the monetary stimulus that is needed, providing the market funding in the face of a liquidity crisis to support the economy and close the output gap and get the economy back and keep inflation on target. The difficulty with modern monetary theory is that it has all sorts of objectives, and while they may be worthwhile objectives, monetary policy is not the way to achieve them. With respect to issues of debt forgiveness, I will highlight that we are incredibly privileged in this country. We are a very rich country, and as difficult as this is, it's way more difficult for many emerging market countries. They have nowhere near the capacity to provide the kind of stimulus that we are able to put in place to support Canadians. Their health systems cannot cope with this crisis. So, these are really decisions for the government and governments globally. But I think one of the issues going forward is going to be how does the world support countries that don't have the resources to deal with this. And the IMF is certainly putting in place new programs, the World Bank, and we participate in those forums. It is a big issue.
If I get my supplemental,
Yep.
Since you've raised the issue of the World Bank and the IMF, I'm attracted to the notion that post-pandemic we can actually ask some big questions. As you said, this is unprecedented as an economic hit in certainly not just our lifetimes, but a while back. I'm wondering if you think there's any attraction among other central banks and policymakers around the world that we should really think in terms of something on the scale of a new Bretton Woods, to sit down and say, is the IMF, which was obviously originally established to set currency rates, it doesn't do that anymore. Do we want to look at the role of the World Bank, the IMF, the larger questions of how we structure our arrangements in a global economy in order to better meet the need for stimulus to get economies back up and staying stable post-pandemic?
Well, I will say that this pandemic has underlined once again that many of our biggest global challenges, our biggest challenges are global. Whether it's climate change, whether it's a global pandemic, whether it's global financial stability that we had to confront 12 years ago, we cannot solve these problems one country at a time. And I worry that the lesson that you're seeing I worry that the lesson some people are taking from this is we need to close our borders and look inward. I think actually the lesson is the opposite. We cannot solve these problems on our own. We are going to have to find mechanisms to work together more effectively, more cooperatively, globally. And for Canada, that's particularly important. We're not a big country, as others have underlined. And the global rule-based system has served Canada very well.
Thank you very much for your time.
Thank you both. Just coming off that question, I have a couple myself, and that is during these times, Governor, Senior Deputy Governor, what is happening globally between the central banks? I mean, you are absolutely right. This is a global pandemic that affects the economy of all countries globally, and certainly the health of people globally. So, what's your strategy in terms of central banks globally?